So just to give you guys a real quick overview about CommLoan, we're a commercial real estate lending platform. We've been around for about 6 years now. Started beta testing the platform in Arizona and California. It took about 1.5 years to develop the technology. We have a full-time development team in India. We have an office just outside Delhi, which we've had for the 6 years or so. We're just probably in the last several months started scaling nationally. We're in, oh my God, probably about 10 states now. We're in Arizona, California, Colorado, Utah, Texas, Florida, Georgia, Washington State, and probably by the beginning of next month, we should be in New York and New Jersey. We cover all property types with exception at the moment of hotels, hospitality, just because nobody's lending on hospitality because of the pandemic. And we don't do land and religious institutions. Excuse me. Oh God, just had a sneeze coming on that went away. So yeah, but pretty much we'll do everything else. You know, the 4 main food groups, which is retail, industrial, office, and multifamily. But then we'll do, you know, single tenant. We will do triple net lease properties. We'll do rehab. We don't do ground up construction because once again, that's too many moving parts. But we'll do any kind of rehab, whether it's a major rehab or a light rehab. Our minimum loan size that we do is $1 million. We do a lot of SBA for owner occupied. We've got phenomenal SBA products. So that's something we're very aggressive on, you know, both the 504 and the 7A. So I think that gives a real brief overview. And what I'm going to touch on, and I'm going to start sharing my screen if I can. Can everybody?
While you're doing that, yeah, Mitch, I see it. I just want to add to something you said. We also do single family home portfolios. So that might be something you guys run across from time to time. We can restructure the debt or purchase money. And I think on a rare basis, if you guys had something less than $1 million that was still palatable, it was a deal that had legs, we had a good sponsor and a good property, we would consider, stuff that's in that, $500,000 $1 million range as far as the loan proceeds. Loan amount would have to be, at least $500,000, and that's just on a case-by-case exception basis.
Right. Thanks, Eric. So what I'm going to touch on really briefly before we get into the details is really how technology is changing our world. And we're just demonstrating how CommLoan has a technology platform which is really going to change the way commercial real estate is financed. So going back a little bit in history, our ancestors, probably about 200,000 years ago, were hunters and gatherers. And that was, for 200,000 years they did it. And then for about 1,200 years, people sort of figured out to settle down and they can stay in one place and, raise crops and livestock and not have to, walk around from place to place. So your agricultural era lasted for about 12,000 years, sorry. So you went from 200,000 to 12,000. And then with the advent of the locomotive and the steam powered engine, you had your industrial era, which lasted about 250 years. You then have 68 years ago, the silicon chip was developed, which really transformed processing power and processing capabilities. And around 38 years ago, believe it or not, it seems like it's been around a lot longer, the internet was developed. And probably shortly thereafter, the advent of online platforms. So the whole point of this exercise is to show how time is compressing and how the advancements of mankind is just sort of leaping ahead in such a short time frame. And it's all a result of technology, of this huge advancement in technology, which really was spearheaded by the development of the silicon chip. So you went from 200,000 to 120,000 to 250 to now, just over a half a decade, a half a century, that you've got these huge advancements taking place. If you just took now and looked at our lives today, and household names, obviously Amazon being the granddaddy on the retail side, through Uber, through Netflix and Priceline and Airbnb and Match.com. It's just really the use of technology and search engines to synthesize a huge amount of data in a very short space of time and give the user the ability of sorting out and saying, these are the criteria that I'm looking for, find me the best based on what I'm looking for. And it applies to personal life. There's all these dating sites, Match and eHarmony, et cetera. Obviously, Amazon has redefined the retail space, not only from access to information, but using technology to totally transform the whole user experience, from their delivery times to tracking of parcels, etc. And then if I would have told you, just several years ago that you would have got into a total stranger's car and have them drive you wherever you want to go, you would have thought I was like totally crazy. But Uber, Lyft, it's just commonplace that people do it, and it's just been enabled by technology. Priceline, Orbitz, Travelocity, etc. for the travel industry. Netflix with the broadband and the ability to stream data. You've obviously got Blockbuster that's gone out of business, and it's just really redefined entertainment. And then once again, Airbnb, where if I would have told you 10 years ago that you'd comfortably go and stay in a total stranger's home, you probably would have thought I was nuts as well. And Airbnb has enabled that. You look at a local story, PetSmart, which is obviously one of the big retailers that are headquartered out of Arizona. They have in excess of 1,500 stores, and they are doing very well. However, they saw the need to spend, in excess of $1 billion acquiring Chewy's, because they saw the power of online retailing, and they saw online retailing as an enormous threat to their business. So instead of trying to beat them, they joined them. So clearly, across the board, technology is redefining the way we look at our lives. So now looking at commercial real estate, who are the big players in commercial real estate? You obviously have the granddaddy CoStar, which really controls a huge amount of the data. CoStar obviously owns LoopNet. They own, I believe, Apartments.com and a whole bunch of other subsidiaries, but really dominating the commercial landscape as far as data information using technology. And then you have all these other online platforms popping up. You have 10x, which was formerly auction.com. You have Crexi, RealNext. And obviously, we're the probably only online commercial real estate lending platform that empowers the borrower and turns the golden rule on its head. And for those of you that don't know the golden rule is he who has the gold makes the rules, right? And up till now, that's been the case because the banks have the gold, they've got the money, and up till now, they've made the rules. And it's been a case of, let me figure out how to fit this borrower into my guidelines. What we're doing, and it's quite funny, we have a poster of the golden rule in our office, and we have it framed upside down because we want to turn that golden rule onto its head. And we want to empower the borrower. Money is nothing more than a commodity. So the lenders shouldn't be the ones calling the shots. The borrower should be the one calling the shots. The borrower is the one that should be choosing the lender and choosing the variables that best fit the borrower's needs, opposed to the lender dictating, well, this is how you need to do it because this is what we can do. So let's look at the commercial real estate lending marketplace. It's very complex. It's very fragmented. You've got all these different lender types. Residential, for those of you that do residential, it's lending is pretty simple. You have Fannie Mae and Freddie Mac that dominate the market. You can get a 30-year fix, you can get a 15-year fix, you can maybe get an intermediate adjustable. The property types are going to be a single family home, anywhere through a duplex through a fourplex. That's it. I mean, there's really nothing more. So very, very simple landscape. On the antithesis of that almost is commercial real estate lending, where you have so many different types of lenders, ranging from CMBS, which is the commercial mortgage-backed security lenders, like Cantor Fitzgerald, Goldman Sachs, etc. You have Fannie and Freddie on the multifamily side. You have banks, and not all banks are created equal. You got federally chartered banks, state chartered banks, community banks. You got credit unions, you got debt funds, you got private money lenders, you got insurance companies. Every one of these have different underwriting guidelines. They all have different preferences as far as property types, program types. So then to further complicate it, you got so many different property types. As we discussed, you got your four main food groups, which is industrial, office, retail, multifamily, but then you got hospitality. You got special use like car washes and self-storages. You've got hospitality. So and even within each category, you got subcategories. So if you look at hospitality, all hotels aren't created equal. You got full service, you got limited service, you got flagged, you got unflagged, you got internal corridor, you got external corridors. And you got a combination of all of those, where it could be a flagged, limited service, external corridor. It could be an unflagged, full service, indoor corridor. So, and each lender is going to have different requirements as far as what they want to lend on. Now, if that wasn't complicated enough, now you got all these different loan types, ranging from monthly adjustables on some bridge loans, all the way through to 30-year fully amortized, say, on a HUD loan, and everything in between. The most typical being in the intermediate adjustables being the 5-year, 7-year, et cetera. So needless to say, in this environment, the borrower really isn't well served. It's just a very, very tough environment for the borrower. So the solution is CommLoan. What is CommLoan? We're a online, cloud-based, transformative platform where we give the borrower access to literally tens of thousands of loan programs, within literally seconds. But we recognize that we're dealing with a very, very technical product. This isn't like going online to Amazon and buying a TV where you know your size you want, your price you want. There's a lot of moving parts. So we match the borrower right up front with a seasoned loan expert, one of the team members on Eric's team. We have a team of loan consultants who will then counsel with the borrower and structure the borrower's transaction based on their needs. This slide's a little bit out of date. Currently, we have probably in excess of 60 5-star reviews on Google. And the way that it works is the loan consultant will talk with the borrower, understands what their needs are, keys the information into our platform. Up will come all the matches. We'll filter it down to the top 6. And then the borrower will be issued a pre-qual certificate instantly with the 6 best options. If they decide that this is something they want to move forward with, we do have them sign an exclusive broker agreement. The reason we have an exclusive broker agreement is twofold. A, we're going to invest a lot of time, energy, and money into that borrower processing and packaging the loan. So we don't want to invest that if we're going to be working with 10 other brokers. And the second reason is we want to control the transaction, and all the lenders we work with know that we control the transaction. Because of that, they take our loan seriously. So we're able to get the best deal out of every one of these lenders because they know we ultimately are going to be instrumental in working with the borrower to select the best lender. So as a result, it gets the borrower the best possible terms. It's only a 30-day exclusive, and we have a release clause that if they don't like any of the term sheets we provide, we release them from the exclusive immediately. So we have the lender database. The lenders can update their data through a portal. It's a very, very secure platform. So everything is contained within the platform. You're not emailing or faxing data, which is obviously not at all secure. These are some of the lenders we have on our platform, and it's actually, this is outdated as well. We have probably now in excess of 400 lenders, including all the big national banks, Fannie, Freddie, bunch of life companies, et cetera, and then we have, private label relationships with a lot of the larger commercial real estate companies on a national basis. So essentially, our competition is the traditional way of doing things. So, your client can either go the old-fashioned way and go from bank to bank themselves and work with a spreadsheet. And each bank is going to ask them for different requirements, and they're going to go back and forth working with multiple loan officers. It's going to take weeks and weeks and weeks, and it's a very high effort. The other way is to work with a mortgage broker who, on a manual basis, really can have no more than relationships with 10, possibly 15 lenders. Also a very, very time-consuming process, also requiring a higher amount of effort. Or alternatively, they can work with CommLoan. Instantly, they're going to get access to 25,000 plus loan products. They'll get a pre-qual within minutes and very, very low effort. So clearly, you can see there's absolutely no comparison. We are fitting in the space where typical mortgage brokers fit, but the same way as Priceline and Orbitz and Travelocity, in essence, fit in the space where your typical travel agent lives. And for those of you that are old enough to remember, in the old days when we would travel, we would go to our local travel agent on the corner and they would book our airline and our hotel. Was that the best? Probably not, but that's who they had relationships with. They could manually only have a limited number of relationships with certain airlines and certain hotels. Fast forward today, and you got Priceline and Orbitz and Travelocity, et cetera, and you got access to the world's travel industry. We're essentially the Priceline or Orbitz for commercial real estate lending, and your old traditional mortgage broker is really the equivalent to the travel agent in the travel industry. Anybody got any questions on that, guys? And I think that sort of gives you a good overview on on who CommLoan is. Open to any questions? Either you all fell asleep or I did a good job. I'm not sure which one.
We're listening.
Sorry?
Are we able to post your presentation to our commercial site?
Yeah, I'll be happy to share that with you.
If you want to send to Tarja, that would be fine. And then I've also recorded this presentation as well.
But you're still going to continue, right? About what is the commercial real estate market doing right now with lending?
Yes, absolutely. So now we're going to continue on the other stuff. I just thought we'll give you guys the opportunity of asking any questions if you had any. All right. So the commercial real estate market at the moment, I think for the most part, is doing extremely well, bearing that we've just come out of, or still in probably the tail end of a major pandemic. Obviously, it's very regional as well, and it's very much geared to the property type as well. So if you were the owner of a large office tower in Manhattan, you're probably still not doing great because anything that required elevators with a lot of people in those elevators with the social distancing and restrictions, generally those properties were very hard hit. hospitality, hotels are just virtually impossible to finance, and I think there's going to be a lot of on the CMBS markets, the commercial mortgage-backed security markets. The default rates are climbing dramatically on hotels. So I think, you know, that segment is not doing very well. Will it start coming back? I think it will very soon, and there's going to be a lot of pent-up demand for it. Your retail was the next sector that was affected, but not all. Once again, not all retail is created equal. So, you know, if the tenant mix were relatively unaffected by COVID and by shutdowns and social distancing, etc., and, you know, so for example, your one tenant was a FedEx store, and you know, the other tenant was a grocery anchor or whatever, or a Home Depot, you know, those were doing great. You know, your strip centers that just had a lot of restaurants and that kind of stuff have struggled a bit. So commercial lenders on retail are going to really look at the tenant mix in this environment, and how affected have they been by COVID, and what is their probability of survival. So I think that's almost a test that you guys can apply when looking at a particular commercial property. Is, you know, what is the tenant mix like, and how have they done, and how they're likely to do. And I think, fortunately, I think all indicators are on the tail end of this thing. I think the latest numbers are that they giving vaccines to about 1 million people a day in the United States. They've vaccinated in excess of 70 million people, and needless to say, probably the same amount have contracted COVID. So you've got a large percentage of the population that should have some level of immunity already, possibly up to about 50%. So I think we're getting to the tail end. You know, we've got a few more months, and I think that chapter will be gone. There's an enormous amount of stimulus money coming into the economy, which obviously is fueling economic activities. So that's very positive. I think there's a lot of pent-up demand. Multifamily is going absolutely crazy, particularly in Arizona. The prices are rising dramatically, as you guys would, I'm sure, will attest. Those of you that are in the single-family home or the residential space have seen that there's certainly not an abundance of inventory out there on residential, and the same goes for multifamily. Office, I think, is very similar to retail. It's going to be very much based on the tenant mix and how affected they have been up till now. But once again, I think you know, everything that was a reality for the last year is going to start changing over the next few months as this pandemic lifts, and we can start getting back to normal. The negative, I think, of all this money that's being, you know, trillions and trillions of dollars that the legislators are pouring into the economy and essentially printing money, there is a danger for inflation, and as a result, upward pressure on interest rates. Interest rates have bumped a little bit, and then they've sort of come down a bit. But I think, if anything, that could be a concern, because you know, the minute inflation starts rearing its head, the Fed has to react by starting to tighten money supply to keep inflation under check. You know, that hasn't happened yet. I think there's still, you know, enough recovery. So I think for the foreseeable future, it's unlikely that rates are going to go up dramatically. But I think you know, that is a definite danger. So I think, particularly in Arizona, you know, you got positive population growth of in excess of 100,000 people a year. That was the last number. It's probably even more. You have all these major companies moving to the valley from California and other parts of the country. So I think Arizona, the prognosis for commercial real estate, certainly for the foreseeable 12 to 24 months, is really good. I think there's a lot of opportunity. There's going to be a lot of activity, and I think it's really a good time to be in this market. Any questions on that, guys? Anybody got anything?
What are examples of your most popular loan products right now, like the terms and interest rate? What do for investment properties?
So typically your multifamily is probably the hottest item at the moment. Everybody wants it because it's, you know, it seems to have done the best through all of this, and there's an enormous demand for housing. So occupancy levels are very high. So I think in all intents and purposes, that's probably been the most popular. And interest rates, you know, depending on the loan size, if it's a large, what we call conforming agency, you know, it's still been in the upper twos. But typically your interest rates are going to be in the mid threes at the moment on a typical intermediate adjustable. And by intermediate adjustable, you have like a fixed period, could either be 5, 7, 10 years. And then you have an amortization period, which could either be 20, 25, 30 years. And then you have a maturity term, which could, you know, be anywhere 5, 10, 15 years. So those are the most popular. It could be like a typical loan product would be what we call a 5-30-10. What that means is your rate's fixed for 5 years. It has a 30-year amortization and then matures in 10 years, which will mean it'll readjust halfway through the loan, you know, after 5 years, based on an index. So typically those are the most popular loan products. But once again, the beauty of CommLoan is we really don't have a dog in the fight, as they say. I mean, we are the marketplace. So, you know, whatever any bank or credit union or debt fund or Fannie Mae or Freddie Mac lender or CMBS lender is offering, we're going to offer. And it ebbs and flows. You know, sometimes the agency will be better on a particular transaction than a bank. You know, the credit unions are phenomenal on some products because typically they don't charge a prepayment penalty. So it just varies. It's going to vary product by product, property by property. But the beauty of the platform is we're going to get the borrower the best that's available out there just by virtue of the technology.
Hi, Mitch.
Yes.
We have a question. Loans for apartments, can they obtain purchase and reposition financing?
Absolutely. Apartments, absolutely. We got purchase, we got rehab. We do a lot of rehab. And anything from light rehab, which is, you know, $7,000, $8,000 a door, all the way up to heavy rehab, which could be like $30,000 a door. We do it all. So the way that would work is you do an initial bridge loan for the rehab portion, which typically is 1 to 2 years interest only. And then that rolls into a permanent loan once the property is stabilized.
And also, what are your fees?
So we generally charge, and it varies. We have a sliding scale, but on a typical smaller deal, and we consider $1 million to be a small deal, we charge a point. But the beauty is the banks don't charge anything through our platform. So typically, if you would have gone to the bank directly, you would have paid a point, or the borrower would have paid a point. But they discount that back to us because we do all the initial sizing of the loan. We package the loan. Our packages are phenomenal. We pull in market data, we pull in comms, we have images of the property, we do run all the spreads. So literally they can take our package and put it in front of a credit committee. So the lenders love our packages. And, you know, so I'm going to give you a real, probably the ultimate borrower experience. So there was a gentleman that he's actually the president of our company now. He was had exited out of a technology company and was buying some commercial real estate, was buying an office building here in the Valley. Was intrigued by our platform because he had been in technology, had a very deep banking relationship with a local bank, and but was intrigued by technology. So he said, even though my bank's on your system, I will go ahead and use you guys. I'll sign an exclusive. And even if we go with my bank, you guys are in the mix. So his bank obviously never charged him anything because, we were going to make our fee. The long and the short of it is, because they really wanted to maintain his relationship, and there was a lot of competition for a very strong property and a very strong borrower, we landed up getting him 50 basis points cheaper than his own bank was originally offering him. He became such a believer, he invested in the company, and then recently joined us about a year ago as president of the company. So, it doesn't cost the borrower a dime more, but the nature of the technology and the competition that it creates, and the fact that the banks know that we control the transaction, ensures that nothing's left on the table. The borrower's going to get the best possible deal.
So can you go over the process? So we have a client who needs a loan. What do we do? Do we give the phone number to Eric, or how do we, can you go?
So the simplest way of doing it is the borrower or you guys could just go to our website, which is CommLoan.com. Pretty simple, CommLoan.com. And then they just click on Get a Quote button, and they fill in a very, very short, simple application form. And maybe Eric can actually walk you guys through that. And then they'll get a call from a loan consultant, literally, in a very short time, within an hour or so. And the loan consultant will walk them through what they need and their loan options, and issue the pre-qual and pretty much hold their hand through the process. Eric, do you want to maybe bring that up on the system?
And how long
Yes,
is
Mitch.
the process, if you can let us know? Okay, so then what happens?
All right, so once they get their pre-qual, they can go, each borrower will get a portal that they can download their pre-qual certificate. They can sign their broker agreement right in the portal. The filing gets transferred to a transaction manager who's allocated to the file. And that's a like equivalent to a loan processor. They gather up, the borrower then gets a needs list from the transaction manager, get us your tax returns, your personal financial. And then once the borrower uploads the needs list through the portal, the transaction manager will package the loan and submit the loan to the 6 or so lenders that they're working with. Generally, within about a week, we get term sheets back from all the lenders. The transaction manager will then prepare a grid that they share with the borrower and go through the benefits of each lender and of each term sheet. The borrower will then select a term sheet that they want to work with and a lender that they want to work with, and they will sign that term sheet for that particular lender. At that point, that's when there's the only time there's out-of-pocket costs for the borrower. They're paying the lender directly for their third parties, for appraisal, etc. We will then hold the borrower's hand throughout the process, working with the lender through the third parties and final underwriting and drawing loan docs until funding. Typically, from start to end, a typical commercial loan takes about 60 days to close. That's typical. We can close loans a lot quicker, but it obviously limits some of the lenders we can work with. Or it could take a lot longer. If you're doing a HUD multifamily loan, we got one in our system that's taking almost a year to close. It's just because you're dealing with HUD. But it's just going to vary. But typically, it's about 60 days from beginning to end on a typical transaction.
How about the financing? When do you get the approval? So for the contracts, the financing contingency, 45 days, 60 days to close?
Yeah, I mean, you're going to get a term sheet generally within a, probably from the time the borrower gets their documentation to us, you're going to get a term sheets within a week. And then, from that point on, it's a case of the borrower signing the term sheet. And typically most lenders from that point on are going to take about 45 days to actually give a proper sign off. But I think with a term sheet, with 4 or 5 or 6 term sheets, so yeah, typically, Eric can correct me if I'm wrong, most contracts we see are 30-30. 30-day initial due diligence and then 30 days to close. Is that typically what you're seeing, Eric?
Yeah, that is pretty typical, Mitch. We need at least 60 days. You just got a lot of banks with the Paycheck Protection Program and things they've been dealing with COVID. So it's a little bit slower. I mean, I don't think that was too far off even pre-COVID. You don't want to put a purchase agreement with 60-day runway. And we see a lot of buyers now just asking for an additional 15 days, addendum or extension put in their agreement should they need to exercise that option because the bank was running slow or something like that. I mean, we've seen that before. I mean, we work very quickly on our end, but we can't control, obviously how quickly the credit committees take to get us terms back and so on and so forth. But 60 days, I think, is ample time.
Okay. Any other questions, guys?
Somebody has a question in the chat that you kind of addressed it, but if you can again say, what is the going interest rate?
Sorry, what is the current interest rate?
Going interest rate. I know you. So
Well,
you said mid-threes, right?
it's a bit of a loaded question because it could range from the upper 2s to 12%. It's just really dependent on the product. I mean, this isn't like residential where, this is Fannie Mae or Freddie Mac's rates and every lender is going to be the same, within an eighth or a quarter of a percent. Literally, your conforming or conventional agency multifamily could be in the upper 2s. Then you get up. Typically, most bank deals are in the mid 3s to 4, depending on the property type. And it's all going to vary on property type and loan to value and how long is the term. Is it a 5-year? Is it a 7-year? Is it a 10-year? 5 years are typically going to be in the mid 3s. 10 years could be in the early 4s. Then you can get into rehab loans. Rehab loans are typically going to be maybe in the 5 to 6% interest range. And then you get up into the private money range, which is, for a quick close. If somebody needs to close on something very quickly, it's a non-performing property. It's not generating any kind of cash flow. And that could range anywhere from 8 to 12%. So that's typically, it's, on commercial, it's very much predicated on the type of loan and the property type and the size of loan, which is going to dictate your interest rate.
So you actually do hard money loans too?
Yeah, absolutely.
Okay.
We also had another question about what is your typical volume of loans per year?
So we're currently getting in probably at the moment about 300 loans a month. So, if you put that on an annual basis, it would be about 3,600. But we're ramping that up. I mean, we're expecting it to be almost 3 times that by the end of the year. We're growing dramatically. I mean, we're typically adding probably this month, we're adding probably about 3 new staff members. So even with the technology, we're growing dramatically. We're doing a lot of online marketing. And we have a lot of, different strategic relationships with different companies. We've just integrated with Brevitas, which is that online listing platform. It's in the beta stage, so it's a limited number of properties in limited states. But what happens, anybody goes on the Brevitas site and looks at a particular property, automatically there's going to be a loan quote from CommLoan on their site. And it's our technology that's integrated with theirs. So yeah, we're growing.
And what's the most popular discipline?
Discipline, what do you mean by discipline?
I'm not sure.
You mean asset type, like property type that we focus on, or?
Yeah, I guess so.
Yeah, well, we as a marketplace, of course, we can't pick and choose. Like Mitch said, we focus on office, retail, industrial, apartments. But of those 4 in the 4 major food group, if you will, I'd say it's a pretty high percentage multifamily. 5+ units constitutes a commercial asset. If it's less than 4 units. It's back in residential guidelines. So we tend to thrive on the multifamily apartments space.
Perfect. There's a question in the chat of, do you foresee ground up construction or land loans as a possibility in the future?
Yeah, I think definitely in the future, and you know, like any technology platform, Amazon started off selling books. You've got to pick a narrow vertical and get really good at it before you want to start adding other verticals. You know, the technology requirements for managing construction, you know, is going to be a lot more complicated than, you know, even rehab, because rehab pretty much, it's, from our perspective, it works the same as a permanent loan. We pretty much fund on it, it's done. So I think construction has a lot more moving parts. So, you know, we've chosen to stay out of it for the foreseeable future. And land also, it's the guidelines aren't very clear on underwriting land. It's more just gut, and we don't go by gut. It's got to be very defined variables that can be put into a search engine. So, you know, I'd say at some point down the line, yes, but probably for the foreseeable future, no.
Do you have any lenders that you know that are good at lending for land? That you could say?
You know, it's. I mean, we haven't really even asked, but I think typically a lot of the smaller community banks within the area where the land is are going to be, you know, good alternatives for land, because, you know, that's, you know, typically those banks can go drive by and they know that the loan officer drives by the land on the way to work, kind of thing, and they're very familiar and they know what's across the road and what's going up 2 streets down and the type of thing. So, but yeah, I would typically say it's very localized with your local community banks, credit unions would be the best for land deals. Any other questions, guys? Okay, great. Well, I guess we finished just a few minutes early, but if nobody's got any other questions, really appreciate the time, and certainly love the opportunity of working with you guys. You know, just growing your commercial division from strength to strength using our technology.
Thank you so much, Mitch and Eric.
All right. Thanks, guys. Appreciate it. Thank you. Bye-bye.
Thank you.
Thank you, guys.
Bye.
Bye-bye.